Nothing. Can start. Can start. Hello, very good afternoon. Welcome to join us for the second session of this budget 2021. This afternoon, we're going to do the English version. My name is AdrianYeo. I'm the founder of AdrianYeo accounting firm 26 years ago. We've been giving this budget talk for maybe about 18 years running. This year we're a bit late because of COVID. Since the last MCO, the government come up with some packages, so we put them together to share with you on some of the incentive given. This afternoon we're going to have two speakers. I'll do the macro side for about 20-25 minutes. Then the details will be done by Cindy, my tax director. Let's go. How to go to the next screen? Okay. So the theme of the budget, I think, is the government try to help the needies, the low income individuals and the SMEs. With the help of the government to fund the needies, so the COVID fund allocated 17 billion for this COVID for the employees, the low income group, and SMEs. Then the development expenditure 68 billion. So then the income is 236 billion. Operating expenditure is about the same, 236. So the income for 2021 will be equal to operating expenditure. This is what Malaysia have been doing over the past 24 years or so, since 1997. The income always equal to operating expenditure. Then development expenditure is always in deficit, but this year we have COVID 17 billion extra. So the total deficit is 84 billion. It used to be about 30 billion. So this round, we have about 50 billion shortfall. With the 237 billion income, then expenditure is about 322 billion. So shortfall of 85. Shortfall 85 compared with 2020 is around the same. That contribute to roughly about 5 to 6% of the GDP. We used to have deficit around 3%. So last year and this year, almost double the deficit amount and in percentage. Here on the income, being a tax agent, I look at two main things. Company tax from, you see, from 2019 was 75 billion. 2020 dropped to 70 billion. 2021 increased to 76. So this one is a bit unusual, because for corporate company tax, 2020 the collection has dropped from 75 to 70. So this figure going to drop more in 2021, because most of the account has just the new one will be ending in 2021. So the expected turnover will drop. With this COVID MCO and CMCO for additional 3 months, so the turnover by and large will drop. Assuming the turnover drop by 10%, it might have an impact to profit, say 30%. So company tax wouldn't be increased. Most likely will reduce further from 70 to maybe 65. So what is the extra? Let's say about 10 billion extra. So most likely this extra will come from audit and investigation. So the businessmen be prepared for more stringent audit and investigation. The income for individual in 2019 was 30, the tax was 39 and dropped to 36. But this figure, 36, shot up to 42. This figure too high. I think the income of the people will struggle to maintain. So I don't think it can be more than 36 in 2021. So what is the extra? The 6 billion. Most likely is also audit and investigation on personal tax. On the forecast GDP, the forecast about 7% for 2021, but seeing the MCO and the coming impact of CMCO, I don't think this 7% will be realistic. I would think maybe 4%, 5%. So this figure too rosy. So on the macro side, there are not much to touch on. The government have to spend more. The deficit will increase, and the income, the economy just doesn't generate enough activity to pay more tax. So the only way is to penalize those people, businessmen or individual who have been naughty. So the additional income will be from audit and investigation. So before I sign off, I'd like to touch on GST. In the media, there are many talks, including Mahathir, Lim Wan Eng, while they are in government, they talk about if the people want GST to be back, the government will consider GST. With the new government, they also been talking about GST. Why GST is always a subject of discussion. GST will bring in more income, let's say about 44 billion a year, whereby SST only bring in 21 billion. So the contribution to the national coffer for SST is about 7.6, whereby GST is 20. So if you need more money, you just go straight jump into GST. GST has more registrants. For the past, GST have clocked in about 600,000 registrants, whereby SST is only 47,000, whereby the taxable supply for GST is 12,000 items, and SST is only 6. So GST, the net is wider than SST. So for businesses, most businesses are in for GST. And then in the perspective of tax collection, so GST is also the favor ones. So this GST 2.0, 2.0, we have to prepare for 2.0 to come through. I don't know when, but definitely will be coming. When GST make a second comeback, I think it will stay there for a long time, and the rates will increase from say 6% to 8 to 10, then gradually we go up to say 20% like UK. So so when we do some planning, some strategy, we have to think of what are the taxes that are coming through. Apparently, capital gains tax and inheritance tax are of less urgent. Inheritance tax in the West, they collected only about 0.5% of the government revenue. So Malaysia is still a young country. So if they were to introduce inheritance tax, definitely they're going to get maybe a fraction, maybe a 0.25%, or even lesser of the total revenue. But by capital gains tax, we already have another form called real property gains tax. So maybe capital gains tax is not really urgent for discussion, but GST should be the hot one. I think in over the next couple of years, this topic won't go away. So if GST were to come back, who will be the winners? Who will be the loser? Manufacturer, importers will be the winners. The losers most likely will be property developers, contractors, and some service provider. Those people who are not caught under SST. But for professional who charge SST now, they'll win a bit. Those people who don't charge SST but have to charge GST will be the losers. So on GST, I'll highlight certain thing like some of the listener here are property investors. If you were to buy commercial properties, new one might be you want to consider using Sdn Bhd to buy instead of personal name in view of GST coming in, let's say a few years down the road. How to go back? What's the difference between, what's the impact if you buy a shop lot under personal name, especially if you have more than 2 commercial properties. Under the GST era, you have more than two or more property. On disposal, you have to charge GST. So i.e. the buyer had to pay for GST, and you as a seller, you have to pay RPGT. You have to pay RPGT if you sell, and the buyer who buy from you have to pay GST plus stamp duty. But if you were to sell shares in a Sinan Berhad that own commercial properties, then the shares not subjected to no, the shares still subjected to RPGT on disposal, but the buyer will save a lot because when they buy the shares from you, only pay 0.3% of the stamp duty and no need to pay GST because share doesn't attract GST. So for those who are investing in commercial property like factory and shop lot, maybe you bear this in mind. You bear GST in mind before making a decision. With that, I conclude my introduction. Is there any question before I pass the floor back to Cindy? Any question for me? If there's no question, I'll pass the mic to Cindy, our tax director. She will go through the details of the budget with you all. Thank you very much.
Hello, good afternoon. Hi, good afternoon, everyone. Can I have a quick check on where you're coming from? Can you leave in the chat box if you're from PJ? So you just key in PJ. So you're from Johor, so you key in Johor. So let us know where you're from. Yeah, in our Facebook Live. In our Zoom as well. Okay, let's start. Okay, I will be talking about how's the budget 2021 affecting the individual tax. So basically, what do you mean of the individual tax? So basically, we have three categories. So the first category is referred to the employees. Like myself, Teresa, we are all under the salary group. Or you only receive pure rental income, then you'll be under this category also. So every year, we are employed, so we'll get a copy of the EA from our HR. So the tax return filing due date is by 30th April every year. But if you submit your tax return online, so you'll get extra 15 days. Means your due date to submit your online return form is on 15 May every year. So the next category is the sole proprietor. So what do we mean of the sole proprietor? Like some of my friends, they are running their small business, entrepreneurship, like they are doing the small renovation job, or our clients also, they're having their salon center, running their salon center, or the repair and maintenance of the aircon. So basically, they will be under this category, named as sole proprietor. So as a sole proprietor, what should you do? So normally you should prepare the financial statement every year. So financial statement includes profit and loss accounts and balance sheet. So after that, only with the P&L, then only you need to compute of your personal tax under the sole proprietor, and you need to submit a form. This is a called Form B. When is the due date? The due date is on 30th June. But with the extension under the online submission, then your due date you're granted for 15 days grace period. So the due date is on 15 July. So we're talking about the first category, the second category, now is the third category. So third category is partnership. Sometimes you may have partner A and partner B, or even have 2 or 3 partners to run this company. So for the partnership, also the same. The partnership, they need to prepare the financial statements with the P&L and with the balance sheet. So we need to compute the partnership profit. So the partnership itself is not entitled to any tax, but the partnership profit will be distributed to each of the partners. And then each of the partners is responsible to submit their tax return. By when? By 30th June every year. Again, the same, you submit online, you will granted another 15 days extension. So clear? So we move on now. So in basically, so we have 3 categories for the individuals. So now let's look at how the budget 2021 affect the individual tax. So this is the individual tax return rate. So the budget 2021, it has the tax rate has been reduced from 14% to 13%. For the chargeable income band from 50,000 to 70,000. So how much is the tax savings? The tax savings in year 2020. So when are we going to submit our tax? So if you're under salary group, like Teresa and I, and maybe some of you, so we need to submit by 30th April. So if my chargeable income is 70,000, we look at this band when I highlighted in red box. So if your chargeable income is 70,000, you need to pay tax about 4,006. And when come to next year, in year 2021, so you just need to pay about 4,004. So you save about $200. How many of you do know how to read about this individual chart? Okay, let me explain another example. If you have chargeable income of 80,000, so the first 70,000 will be taxed at 4,006. So the next 10,000, so you have to look it, you will be taxed at 21%. So 10,000 at 21%, so your income tax payable is 2,001 plus just now 4,006. So in total tax, if your chargeable income is 80,000, you need to pay 6,007 only for your tax. So the effective tax rate is about 8.4%. So this is very reasonable. Okay, if you're earning 80,000 and you just need to pay about 8.4% tax to the government. So this is the conclusion. Okay, let's look at the second changes on the individual. Increase of the medical treatment for the parents. So some of you may not know, the medical treatment for the parents also we can claim. So basically, what are the category or what are the expenses then you can claim under this category? The first thing is the treatment in clinics and hospitals. Second is if you're not free, or maybe you're overseas, or you send your parents to the nursing home. Also, the nursing home expenses, you can make a claim. But this one only limit to 5,000 per year. And dental treatment also. Dental treatment like scaling and filling, only you can claim. How about the cosmetic dental treatment? Excluded in this relief only. And the last one is the treatment and care at home. Daycare center and home care center for your parents. I think nowadays it's not very cheap that we send our parents to the home care or daycare centers. So it costs about 3,000 to 4,000. If you send your parents to the higher class, premium daycare center, costs you about 4,000. But now, the most important thing is we need to keep the receipt. Okay, keep the receipt from the clinics, from the hospitals. And then this relief has been increased from 5,000 to 8,000 next year for 1 year only, which is in year 2021. Effectively from year 2021. Okay, let's move on. So this one is the childcare center. So I do believe if you have the children at the age of 6 and below, then you send them to the childcare center. And you can claim a deduction up to 2,000 per year. But this 2,000 is for the household. That means one family, they can claim for 2,000 only. Yes, I think there's one question. Maybe we address your question later. Okay. So maybe you key any question, feel free to key in the chat box. Then we'll reply you later. So we have our stand. Yeah. So if you send your children to this kindergarten, so this kindergarten must be registered with the MOE, Ministry of Education or Department of Social Welfare. So also again, you need to ask a copy of the receipt from the principals in order to claim. That means one family, one childcare claim only. Depends whether your husband's salary is higher or your salary is higher. Let the one with the higher tax bracket to claim this incentive. And this incentive has been increased to 3,000, but only for 2 years only, which is year 2020 and year 2021. So please take note, for 2 years only, not effective from year 2020. So with the limited 2 years. So some of you may say, hey, Cindy, I have 4 kids, then how? Like me, 4 kids. So how much can you claim? So sad, you only can claim up to 3,000 maximum. You cannot claim 3,000 times 4. Okay, so let's move forward. This is the medical treatment for yourself, for the spouse, and for your children. So this medical treatment include of serious disease. And start from year 2020, it also include of the IVF treatment, fertility treatment from year 2020. Okay, this serious disease includes what are the disease. They have a list. You can refer to the income tax website. So the list include like cancer, the heart attack, a brain tumor also. And this 6,000, don't forget, you can claim of your full medical checkup, but it's up to a maximum of $500. So moving forward from year 2021, the good news that this relief has been increased to 8,000, include a full medical checkup and vaccine up to 1,000, and plus the COVID-19 screening. So this 1,000 you can be expense on the vaccine, like normally for the children, at the age of 1, 2, 3, or at the age of few months, then you have to give them the vaccine. So the vaccine like influenza, TDAP, rotavirus, and this vaccine also include the COVID-19. So let's move on to your spouse. Okay, this is the relief for your disabled spouse. So the spouse relief, you can claim 4,000. So if your spouse is a disabled person, then you can claim additional 3,500. But from year 2021 onwards, they have increased from 3,500 to 5,000 per year. So in total, your spouse can claim 4,000 plus 5,000, which is 9,000 in total. PRS. So before I explain further, so let me introduce what is the PRS scheme. PRS is meant for the self-employed, also proprietor, because they do not contribute EPF. They do not have a boss, so they are not required to contribute EPF. And if you are the self-employed, then you can make this contribution to the PRS approved by the SC, Security Commission. And when you claim PRS, then you can find a list which are the person you can go and pay for this PRS scheme and contribute. And this scheme, you can claim up to the relief of 3,000. Is quite similar to the EPF. And this retirement scheme has been extended to another 4 years, which is from year 2022 until year 2025. Okay, let's move on to this lifestyle relief. Lifestyle relief, government has grouped this relief into so-called as lifestyle relief, because previously we can claim all these reliefs individually. So now we group together, and 1 year you can claim this relief up to 2005. So it also includes of the reading materials, printed newspaper. If you buy computers, a smartphone or tablets, you can claim internet subscription. If you are a sport person, very active, so you can claim. This sport equipment is referred to the short lifespan sport equipment, like a dumbbell, your golf set, your rackets, your shuttlecock, your basketball. Okay, but it doesn't include of your sports attires, like you buy the jersey, the shoes, and the swimsuits. Okay, it excluded. The gym membership fees also. So with this 2021, it proposed that they give you additional $500 for purchasing of the sports equipment, because the government encourage you, okay, to participate more in the sports activities. So you can claim 2005 plus 500, which is 3,000. And also now, in order to be synced, last time they only allowed you to claim on the printed daily newspaper. Now it has been extended to electronic newspaper. That means if you subscribe your the Star Internet, you can claim on this. On top of that, you can buy your computer and smartphone or tablet now, because government give you this additional relief, but one off only. So from when? From 1st of June 2020 and up to 31st December 2021. Actually, it has just been extended under the PERMI announcement, because previously the period to claim for this 2005 is only from 1st June 2020 until 31st December 2020. So now you still can change your handphone, upgrade your handphone. If you want to buy the computer, also you can change it, because you have another 11 months to change this. So you can claim the lifestyle of 3,000 plus 2,005, which is 5,005 in total. So if you have any questions, so we feel free, okay, to key in our chat box. For the FB Live, okay, you feel free to key in the chat box also. So our assistant will assist to answer your queries. Let's move on to the SSPN. SSPN stands for Scheme Simpanan Pendidikan Nasional. And this SSPN is a savings introduced by this PTPTN. So it was introduced in year 2004. So it enabled the parents to save and eventually finance their children's education. So in order to encourage more individual to deposit the money into this SSPN, so the government, they will give you the tax relief up to 8,000 per month, per year on the net annual savings, 8,000. Okay, this is the net savings. Not net savings meaning to say, okay, this is like your FD or like your normal savings account. You can bank in and you can withdraw the money anytime. Let's say if you bank in January, 10,000, and you need the money and you withdraw in June, you withdraw 5,000. At the end, your net savings is only 5,000. Then you can claim only 5,000. So this is the net savings. And good news, this scheme has been extended to another 2 years, which is up to year 2020. And how are you going to open this? I believe many of you still not realize that how are we going to buy this? we can save about 8,000. Can you imagine? If your tax rate is very high, you might save a lot at the end of the year. So it's good. So how are you going to buy this SSPM? Of course, you always can go to their website, SSPM online website, and apply online and open the bank account. It can be done within 10 minutes. If you're not very hands-on on the IT gadgets and online, then you can always go to the counter, PTN counter, or you buy through the agent, or you can go to the Maybank or RHB Bank to buy this SSPM. But some of you may ask, hey Cindy, if I buy now, can I claim for year 2020? So what do you think? Obviously, the answer is no. So if you buy now, you will be affected in your year 2021 personal tax. Okay, let's see what are the reasons then you should buy this. Okay, this is Mr. AdrianYeo, our boss. Our boss put in the deposit of 8,000 this year. And Mrs. Yeo Jingy, our lady boss. Lady boss also put in this 8,000 SSPM savings. So let's say, for example, both of them, the income tax rate is 24%. We assume only 24%. So 8,000 times 24 is 1,920 savings per person. So the total savings for husband and wife in total is about 3,008. That's a lot of money. Okay, let's see this calculation. Total tax savings for the husband, for Adrian and Jingy, is 3,3840. How about dividend? This is like your FD or like your savings account. So because you put the money there, so at the same time, so they will give you the dividend. So the dividend is about 3 to 4%. But here, this scenario, we give you 5% dividend. So the dividend of 16,000, then you have $800. So your total returns is 4,006 on your total investment 16,000. So how many percent of your investment yield? 4,006 over 16,000. Your investment yield is about 29%. So in the market, in the market, how often can you find this such a good investment? It's 29% per annum. Okay, I think you should go ahead and pay for the open this SSPM accounts if your income tax rate is very high. Okay, let's move on to the expansion scope on study fees. Normally, after we graduated from Sunway College, SCCA. So if you want to further study on master or doctor course in any field, don't you know that for this further study, we can claim about 7,000 per year on the study fees. But if you study on the selected fields of study, here refer to if you take on degree course, only selected fields of study like law, accounting, or technician, then you're allowed to claim this 7,000 relief. Okay, but now this relief has been expanded also for the course, the fees of attending upskill or self-enhancement courses in any field or skills. This one is more, okay, relates to the soft skills. Soft skills meaning it could be like design, social media, it could be like time management, leadership. So all this, if you want to find more about what are these courses included, then you are welcome to go to this website, www.myspike.com, www.myspike.com, to know furthermore on what are the courses entitled for this 1,000 study relief. Okay, this is the last slide on the changes affecting the individuals. As we know, under this COVID-19 pandemic, the government may foresee that a lot of us, the staff, they may lose their job because as a business, you're impacted by the COVID-19. And in order to reduce the cost, the first thing two causes are the major costs in the business. The first is the salary. The second could be rental expenses. So if you want to cut down the salary, of course, you may need to cut down of your number of headcounts. Okay, so touch wood, if you're loss of employment due to ill health, if you're sick and your employer gives you the love letter, they fired you, then you can get the full exemption on the compensation. But if you are like the normal, you're not sick, and let's say, for example, okay, my salary say is 15,000 1 month, and I has been working with AdrianYeo for 10 years, and my boss said, hey, sorry, Cindy, so we need to give you the love letter. So, but we will compensate you. So for 10 months, because I work for 10 years already, so they compensate me 1 month per year. So how much is my compensation? So my compensation will be 15 times 10 months. So I will get 150,000 compensation. And at the same time, I will get my exemption also. How much is my exemption? My exemption will be 10,000 times 10 years is 100,000. So at the end, I just need to pay the tax on the 50,000 after the tax exemption. But moving forward, only for these 2 years, 2020 and 2021, so this compensation exemption will be increased from 10,000 increased to 20,000. So back to my scenario just now, if I get 15,000 per year on my compensation, so how much tax do I need to pay now? I will get 150,000, right? 15,000 times 10 years, but I can exempt it up to 20,000, meaning to say I no need to pay tax on my full compensation. So this is the meaning on how the compensation on exemption work for. So we move on to before we continue the next hot topic on the tax 5 tax reduction that help you to save up to 70% of your income tax. So let's take a break of 5 minutes only. So what's the time now? Time now is 2:42. So let's have a break until 2:47. Okay, see you later. Hi, I'm back. So now is 2:47. So let's continue. So we have 5 tips for you all today. So this is the tips number 1. And I believe this is not very new. This is not new to all of us. Okay, the first one, we would like to talk about the rebate for the startup business. The rebate for the startup business and how this tax rebate works. This rebate you can claim up to maximum 20,000 per year, and the government give you the tax exemption up to 3 consecutive years from the commencement of your operations. So what are the conditions to claim this? The first thing, you must be a company or limited liability partnership. So proprietor and partnership cannot enjoy this tax rebate, yeah? So please bear in mind. The second thing, of course, you must be resident and incorporated in Malaysia. Third one is your paid-up share capital cannot be more than 2.5 million. Your gross business income, that means your income not more than 50 million. And this is very important. The fifth point, commence operation between the 1st July 2020 to 31st December 2021, which means this incentive has already been started last year, 1st July 2020 and 31st December until end of this year, and any other conditions imposed by the minister. So this one is cater for the genuine new startup business. It's for the genuine new startup business. Okay, some of my clients say, hey Cindy, why don't I close down my existing company and I transfer all my sales, all my purchase, all my workers, and I incorporate a new company in order to enjoy for this tax rebate. Can I do that or not? So no, you cannot do that, because the government, they can trace you. Every year you have found in, so they just need to key in your IC number, your name, then they can check all your record in the previous all these years. So this one must be the genuine business. But if you have a new stream of business or services, let's say you are the founder of a real estate agency, and if you want now I want to open another company. Business is for the property consultancy or property advisory services. Can I do that and enjoy this tax rebate? The answer is yes, because it's a different stream of business, and this is a genuine new income. So you may consider that also. Another example is like AdrianYeo tax. If my boss, they want to open a new company, only cater for the training and MM2H, so we also can enjoy this incentive. So these 5 conditions are very important. Okay, the business must be commenced, meaning to say, if you have a dormant company and incorporate this company for 2 years ago, dormant, but you can use this company to run for your new business, you still entitled to claim for this tax rebate. Okay, because it didn't say you must be incorporated in year 2020 to 2021. No, they only says you must start to do your business from 1st July 2020 to 31st December 2021. So this is very, very important. So I believe the government have give you enough time for you to enjoy this incentive. Okay, let's move forward for the next slide. Yeah, okay. How much tax savings you can claim? If you fully claim 20,000 per year, maximum you can claim is 60,000. So of course they let you to claim, but at the same time, they have listed down some rules, okay, conditions for you to fulfill. So what are the conditions? So here the rebate is only limit to the lower of the followings. The first one must be lower the actual amount that you incurred for your OPEX, operating expenses. So these operating expenses refer to the rental that you pay, salary, traveling, electricity, transportation, and so on. Okay, this is your operating expenses to run your business, or capital expenditure. Since this is a new company, you must have incurred office furniture, aircons, software, cupboard, computer, and etc. So the second one is the tax payable amount prior to the offset of this 20,000 rebate. And the third one, the rebate that you claim cannot more than 20,000. So the conditions 1, 2, and 3, whichever is lower. Okay. Okay, let's look at the example in order to have a better feel for you. Okay, so in year 1, year 2021, let's say your OPEX or CAPEX incurred only 10,000 and your tax payable is 15,000. So how much tax rebate you can get? So always remember the lower of A or B. So the lower of 10,000 or 15,000. So eventually you will get 10,000 tax rebate. So you need to pay a tax payable of 5,000. So how much is your tax savings? 10,000 over 15,000. Your tax saving is as high as up to 67%. So next year, moving forward, okay, you incur higher capex, 18,000, but your tax payable only 12,000. So you can claim lower of A or B. So 18,000 or 12,000. So you can claim tax rebate of 12 and eventually you no need to pay tax at all. And your tax savings is as high as up to 100%. The third year, if your OPEX is 35,000, tax payable is 28. The lower of A, B, and or 20,000. So the maximum, because government can give you the rebate of 20,000 only. So the tax saving here is 71,000. So some of our clients, they ask, hey Cindy, if my income tax payable is 5,000, after less of this 20,000, will I still get this 15,000 tax refund from the government or not? The answer is no. Okay, you only can deduct up to the tax payable amount that you need to pay, or maximum is 20,000 only. So this is the rules. So this is a matrix table on which year can you claim. Because we have so many questions in mind, if I fulfill the first year and I fail to comply the conditions in second year and I can comply the conditions in third year, so can I claim in all years and all these things? A lot of questions in my mind. So this is a summary. Okay, if you failure to comply with any conditions, so what are the conditions just now? Remember the 6 conditions here. So let's take example of this gross business income cannot more than 50 million, these conditions. Okay, it's in year 1 you have already cannot fulfill. Your revenue already more than 50 million. Once you commence your business, then you cannot claim for year 1, year 2, and year 3. How about if you fulfill all the conditions in year 1? Of course, you can enjoy this 20,000 rebate in year 1. But in year 2, your business is growing and your revenue is more than 50 million. Then you fail to comply the conditions. Then in year 2 and year 3, you cannot claim. Okay, in the third scenario is in the third year. That means I comply in year 1, year 2, I claim the tax rebate. And year 3, I fail. Then you cannot claim in year 3. So basically, this is a summary of the metrics, which year you can claim and which year you cannot claim. Okay, in a particular failure year. Any question, you feel free to key in the chat box. Or you drop us a message in the FB Live. Okay, and this is the tips number 2. renovation and refurbishment of the business premises. On this one, this renovation we cannot claim at all. We cannot claim the CA. We cannot claim any tax as a tax deduction in our tax form. But now the government says whatever renovation that you incurred from this period, 1st March 2020 until 31st December 2021, that means it's 10 plus 12 is about 21 months. You can claim on any renovation that you use for your business purposes. Then how much is the maximum deduction? You can deduct up to 300,000. Okay, and this has to be certified by external auditors. So external auditors here refer to like AdrianYeo, like us. So if we are the auditors for your company, so and you incurred the renovation cost, then feel free to call us to certify for you. So basically, as auditors, what are the supporting documents that we need in order to certify? Of course, we need all the renovation bills, and we need the pictures before the renovation and the pictures after the renovation. At least you have to show us. So the certification is for the liabilities of certification. The auditors, they have to take to certify this. And if this renovation cost, you have applied the capital allowances, then you cannot claim on this deduction, because the government only allow you to claim one time only, whether you claim capital allowances or you claim under this renovation cost. So it's also good for the new startup company, isn't it? Because you can claim for the tax rebate of 20,000, and when you start up a new business, of course, definitely you will incur the renovation costs. So you can claim this as well. So let's look at this. All this list is included in the FAQ under this renovation and refurbishment. So you can take a look of what are the expenses, like when you want to have the electrical installation, all the lighting points, the gas system, air conditioner system, all you can claim. It's all under the category of renovation. Basically, what does it mean of the renovation? Renovation is some of the structural or wet work it is attached to the building. So when you move out, let's say the lighting or the aircon power points, when you want to move out to the new premises, so can you dismantle all the power points, the piping, the cabling, the electrical installation? Cannot, because it has already been affixed to the building. So if you cannot move out, like your ceiling, plaster ceiling, also you cannot. Once you dismantle, it will spoil. So we call all this as renovation. Okay, here another list, like the fitting rooms. Okay, you want to build a extension of your office to have a reception area, or you want to install the canopy or the awning. All these are renovation. So okay, these are the expenses excluding in the renovation. So what are the expenses? Okay, if you are you like a very good and nice environment, the office, then you may engage some designer to design of your office. So how is your layout, and then what are the materials going to use? So this designer fees is excluded under this renovation cost. Or your purchase of the antique also, you cannot claim under this category. Okay, so we have explained about the tips number 1, tips number 2. So now we move on to tips number 3. Of course, this is again not new in the market. We has been talking this since last year, April 2020. Tax deduction on rental offered to your tenants. And if you are the landlord, have a few properties, or you own a few investment holding companies, of course, this is related to you. But this deduction do not have any gazetted order yet. So all these facts, all this information, we just summarize from the FAQ posted in the IRB website. So there's a special, we call it as a special rental deduction. Okay, so the landlord, they can claim on this special rental deduction. Okay, what are the conditions you need to fulfill? So there are 4 conditions you need to fulfill. The first one, of course, you have to rent it to SME. That means your tenants have to be SME. But now recently, last week, under the Benjana announcement, PERMI announcement, so it has already been extended to non-SME tenants. That means as long as you rent it to SME or non-SME, and your tenant is using your premises for their business purposes. So what do you mean of the business purposes? Okay, business purposes here, you can refer to your office, to the warehouse, to the staff hotels, to the showroom, to the retails. So as long as you claim this rental expenses in your profit and loss accounts, is considered for business purposes. And okay, the deduction, that means the landlord must give a deduction at least 30% of your gross rental to your tenant. Gross rental here refer to your monthly rental every month. Okay, and the special deduction is from the period of April 2020 to March 2021. But under the PERMI, it has been extended to June 2021. So it is 9 plus 6 months, 15 months in total, you can claim these deductions. So many of our clients they who ask, hey Cindy, what are the documents that we need to keep in order to make this special rental deduction claims? So here are the 4 documents. So the first one, of course, you must have valid and stamped tenancy agreement. The second one, you must have the rental income statement. The third one, you must have the SME status certification issued by the SME Corp. But now it says it applies to SME and non-SME. So we shall wait and see, okay, the announcement by the government whether SME status certificate is still required or not. The fourth one, of course, you need the tenant information. How much is the rental deduction? Okay, and your rental deduction is from which period to which period? So the question here is, okay, so does the SME status certification is still required? Because the non-SME tenant, if you rent it to your non-SME tenant, you still applicable to make a deduction. But will you go retrospectively? That means from April 2020 onwards, or prospectively? Means from January 2021, this month onwards, because this PERMI announcement just announced in this month. So we are still not sure yet. Okay, don't know yet. So if there's any updates, then we will update in our Facebook, or we will send the articles to our clients as well. Okay, let's look at some of the expenses. Okay, you can deduct against your rental income. Don't you know that if you're taking a loan and you incur of the term loan interest, the interest you can deduct against your rental income. And then you shall keep all the receipts for the repair and maintenance, the quick rent and assessment, the insurance for your premises, if you in management fees or on your community and your agent commission. All these expenses, you should keep the bill, okay, is deductible against your rental income. Definitely, it will reduce of your income tax also. Okay, let's look at the scenario in order for you to have a better picture on it. Okay, this is a scenario. COVID Sendirian Berhad, yeah? COVID Sendirian Berhad is the investment holding companies. Okay, so they rent it to the tenants for their business purposes. Then how much is the rental income? So the rental income is 10,000 per month. And this landlord, COVID Sendirian Berhad, okay, they have give the discount to their tenants. And they give 50% for 3 months from April 2020 to June 2020. And 20% for the next 3 months, which is from July 2020 to September 2020. So what is the tax implication for this company? How much how this special tax deduction affect the company tax position. Okay, let's take a look. Okay, this is a brief calculation. Okay, we look at the first column without special deduction. Okay, your annual income 10,000 times 12 months is 120,000. Because, and you give the reduction of 50%, which is 5,000 times 3 months, which is 15,000, and 20%, 2,000 times 3 months, this is 6,000. So your net rental income received is still at 99,000. Okay, 99,000. So if without any special deduction, so 99,000 at a tax rate of 24%, so you need to pay tax of 23,000, 23760, yeah. But another scenario is with this special tax deduction. So your net rental income still stand at 99,000, but you can claim extra special tax incentive. Why? Because here you fulfill the conditions, okay, for this period, April to June. Then you can claim extra 15,000 from here. So your net taxable income is 84,000 only. So the tax payable is 20,160. How much is your tax savings here? So in short, you can save up to 3,006, the tax savings. So we have done with the tip number 1 on the tax rebate of 20,000. The tips number 2 on the renovation up to 300,000, and you can claim up to end of this month. And tips number 3 is on the tax rebate of the rental deduction. Now we continue with this tips number 4. And tips number 4, it may not applicable to all the companies. Okay, this is under what conditions that we can claim for the RA. In short, we call it as reinvestment allowances. In order to claim for this RA, okay, it's only applicable for manufacturing and agriculture industry. And the industry has to be in the business for at least 36 months, which is 3 years. And you can claim on the qualifying projects only. And this RA, how are you going to claim for this RA? Meaning to say you can claim extra 60% plus your CA 100%. Of course, the CA you can claim through time. You cannot claim at one off. So in total, meaning to say if you incur 1 ringgit, you can claim 1 ringgit and 60 cents from the government. You can claim 60% extra. And how many years you can claim? You can claim this RA up to 15 years. That's a lot. Yeah, that's a very long period of time. So now move on, you see what are the qualifying projects. So what does it mean? Always remember MADE, make. I remember in this way. MADE, the first M refer to modernization, automation, diversification, and expansion. So modernization is like if you are a factory, the upgrade of your the machinery with the intention for the greater efficiency. Like you install the new technology to reduce the all your number of the process and time. So this is the modernization. So you can claim for the RA. The second is the automation. So automation, last time maybe you use okay, like we have one client, they use the 100% automation in their factories. So they runs their factory 24 hours, 3 shifts, 24 hours. So without any break time. So because they can do that, why they can do that? Because they use fully automation. Okay, from manual change to semi-manual is considered automation. If you are in semi-manual change to auto, then it's still considered automation. So you can claim for the RA. The third one is diversification. You diversify. So undertaking the new related product. Like I'm manufacturing a TV, okay? TV, but now I thinking to manufacturing the DVD or CD. Okay or not? Can. Why? Because this is a related product. or your manufacturing of the jewelries, okay, the gold, the jewelries. Now you want to diversify into the crystal ornaments, also can, possible. Okay, let's move on for the expansion. Expansion meaning to say it's an additional production line, but the machinery is about the same. Like your manufacturing of the rubber glove, now you want to expand into the cotton glove, or you want to have a skincare product existingly, you are manufacturing of the skincare product, now you're thinking to expand it into the cosmetic product, also okay under this RA. So just now is the conditions to claim RA. There are 4 conditions, and this is the benefit to claim RA. Imagine you incur 1 million of machinery, we can claim about 1.6 million from the government. Isn't it very good? So let's look at the example here. For ABC Sdn Bhd, this company, they purchased the plant and machinery by cash for 1 million. And this is a manufacturing company, and they operate more than 10 years. Meaning to say they have fulfilled all the conditions, and they purchased plant and machinery of 1 million. RA extra, they can claim 600,000. So total deduction is 1.6 million. So in summary, how much is their tax savings? Their tax savings is the RA 600,000 times their tax rate 24%. So they can save about 144,000. Imagine just one plant and machinery only. So can you imagine if your business is very good? Okay, so you plan to buy about 10 million, 20 million of plant and machinery in the year. So how much tax savings are you benefited from these reinvestment allowances? So you can explore more on these reinvestment allowances with your tax agent or with us. Okay. Okay, this is in summary. The special, okay, hey Cindy, you have been talking a lot on this RA, the conditions to claim, so how long it can be claimed, how it benefits us. Tell what you want to talk, what you want to say. Okay, I want to say is RA, they has been extended. So we have the special RA 1.0 and special RA 2.0 here. Okay, special RA 2.0 has already just announced in the budget 2021. Okay, let's look at the first example. Just now I mentioned the RA, once you claim, you can claim up to 15 years, 1-5. Okay, it will be expired in 15 years. If your RA expired in year 2015 or prior years, then you can have a further claim under this special RA 1.0. You claim another 3 more years, 16, 17, and 18. And now under the budget 2021, the government have a special RA 2.0. Then you can claim another 3 more years, 2020, 2021, and 2022. So in total, under the first scenario here, how many years of the RA you can claim? Remember, the first RA you can claim 15 years. This one 3 years. 15 plus 3 is 18. So 18 plus another 3 years under the special RA 2.0, then in total you can claim for 21 years. So this is a very long, you can claim for a long tax incentive. Because some of our clients, they also worry, after I claim my RA expired, so I'm worried because why? My tax position, my tax payable will be very high. Now it's a good time and good news for them because they can continue to claim their RA. It depends on how many years. So the highest, the longest RA you can claim is 21 years. So if you have any doubts in RA and you own your manufacturing company or you're the accountant for this manufacturing company, so you want to know more, then you feel free to contact us or you go to our website or call our hotline. So we'll get back to you pretty soon. Okay, so now is the tips number 5. What is transfer pricing? Okay, this is a hot topic in the market. Everyone is talking about the transfer pricing. So what is the transfer pricing? Actually, this act is not new. Okay, this transfer pricing act has already existed since year 2012. But now, after the budget 2021, the government, they have announced 2 new additional penalties on the transfer pricing. That's why it makes the tax agent, it makes all the companies and the businessmen, they feel very kanjiong. Okay. And recently, the letter that we received from the IRB, also indication of transfer pricing. They asked for the transfer pricing documents from our clients. So I will show you and I will explain to you one by one later on. Just a very simple summary as a rule of thumb. Okay, transfer pricing means that it occurs when associated person or related party transact with each others. Okay. So first thing, before we talk in more details about the transfer pricing, so we must know how the definition of the control. So what does it mean of the control? Since last year, 1st of January 2019, under this section 140 big A, so the control definition has been revised. All this while, we will discuss about this associated person first. Is one party has control over the other. Okay, second, number 2 is the parties are individual who are relative. So what are the relative meanings here? It could refer to the spouse, husband and wife, the parents and the children, the mother-in-law, the father-in-law, the cousin, the nephews, and the siblings also are considered relative, and they are in the group of associated person. The third one is the parties are controlled by the same person. Like the company A, they control company B and company C also. So company B and C considered as associated person. So what does control means? Like here, scenario number 1. Company A control company A1, control company A2, and control company A3. So as a rules of thumb, as long as you shareholding or voting power more than 50% is considered as control. But the act has changed, and the new definition of control since year 2019, it says if your shareholding at least 20% only, 20%, but you have these shareholders, they're able to influence the decision in relating to their business activities of the companies. Is also considered as control, not only 50%. So they will look at, are you holding 20%? Yes. Then they will check you further. Do you have any making the decision? The power to make the decision. Okay. If the answer is yes, then you are controlling the company. So these are the new definition. Very, very important. Okay. The second scenario, as you see here, company A. Company A holds 60% shares of company B. And company A holds 70% of company C. Of course, company A controls both company B and company C. But if there any transaction like purchases or sales between company B and company C, does it still consider control a related party transaction? Yes, the answer is yes. Why? Because B and C are also controlled by company A. That's why the B and C are considered associated person. So scenario number 3, who is associated person? So look at this diagram. The company A hold 90% of company B, and B holds 70% of C. So can I ask you a question? Is company A and C are associated person? The answer is yes, because A indirectly hold company C. Hold how many percent? Is 90% times 70%. So indirectly shareholding is 63%. So A, B, C here are associated person. And normally we are very smart. We are very smart. So how smart are we? We say, hey, never mind. Like Mr. X, they own a company A. So normally we will ask Mr. X, hey, why don't you set up another company? Use your wife's name. Okay, so that's why no associated person, or use your mother-in-law name. Is that okay or not? Is that still considered related party transaction? Yes, it's still considered as related party transaction. It's considered company A and company B is team control. Why team control? Because of the relationship between Mr. A and Mrs. A. It's a husband and wife, or it's a son and the mother-in-law or father-in-law. So that's why. So you see the definition of the relative here, not just the husband and wife. It could be parents and the children, brothers and sister, your sister-in-law, brother-in-law, uncle, auntie, nephew, niece, and cousin. A very long list. So this is, as long as it's relative, is considered associated person. And any transaction between associated person is a related party transaction, and you need to prepare the transfer pricing documents. So what is the related party transaction? Hey, Cindy, just now you talk about the control. Then you give me the 4 scenarios on how to identify the associated person. And then under what scenario and what circumstances do we need to prepare these TP documents? Okay, any intra-group services like the management fees, cost sharing, cross-charging of management fees. You are required to prepare the TP dot. Intangible properties like the copyrights, the trademarks, loan to or loan from related party, okay, the sales and purchase, and other payments like advertisement, marketing, commission that you charge to your related party. You also need to prepare the TB documents. So you ask me, hey, what if I'm a very small company only and my turnover is less than 2 million and I'm an SME, I'm making a losses. Do I need to prepare the TB documents or not? Or I do not have any sales and purchase transaction between the related party companies. I just have to loan to or loan from. Do I still need to prepare TB documents or not? The answer is yes, very clearly stated in the TP guidelines. So I just want to show you a letter that we recently received. It's a very freshly baked from the oven. It's on, we received this letter on 21st January 2021. And this letter has already started. Can you see the point 2.6 here? Okay, this is a tax investigation case for one of our clients. And this tax investigation case, they asked for 5 years, 6 years. Since start from 2015, 16, 17, 18, 19, 2020. 6 years documents, include the TB documents also. Yeah, in the point 2.6 TB doc. Yeah, this letter, we have to reply within the next 14 days. This is this month, we just received this letter. So now, what does it mean? Meaning to say in future, more and more and all the investigation letter or maybe tax audit letter, then we expected they will ask for these TB documents. So you have been discussed for so many about how important, why we need to prepare. So what is the consequences that we do not prepare these TB documents? How? So currently, if you do not prepare these TP documents, no penalty at all. Yes, the IRB will not charge you any penalty. But from this year onwards, from 1st January 2021, so if the IRB, like just now, our clients, within 30 days, our clients, they cannot finish these TP documents to the IRB, so the penalty minimum is 20,000 to 100,000 per year, or imprisonment up to 6 months. Can you imagine just now they need 6 years documents, and if our clients, they didn't prepare these TB documents, 1 year is 20,000, 6 years already 120,000. Meaning to say, IIB haven't started to investigate and to do the audit on your company. They have already confirmed will charge you a penalty of 120,000. This is a very serious case, so we need to know, and this is very important and important. On top of this, another new penalties on the TP adjustment surcharge. Surcharge is stand for transfer surcharge on the transfer pricing adjustment. And previously, under the situation that if I'm a tax loss making company, even though you charge me the transfer pricing adjustment, after you charge me this adjustment, my company, because it's a tax loss, so I no need to pay tax and no additional tax for me. Hence, there's no penalty at all. I no need to pay any tax. But due to this situation, that's why the IAB says, they say even though you're not liable to tax, but we still will charge you the surcharge, the 5% on the transfer pricing adjustment. Listen properly, it's not on the additional tax. It's a 5%, not more than 5% on the transfer pricing adjustment. Okay, later we will have scenario to show you how, what are the additional benefit penalties in charge on non-furnishing of the TP documents. So this is a summary in general. We compare the existing and the current proposal, the new penalties. You can see it very clearly. The penalty at least 20,000 per year of assessment and surcharge no more than 5%. Now, okay, what do we mean of the surcharge here? You can see there's this scenario. Just now I said, if this company has the tax losses, after the IIB imposed the TP adjustment, the company of 500,000 TP adjustment here, but the company is still in loss position. But the company will be penalized for this surcharge of 5%. So how to calculate this surcharge? The surcharge would be 5% at 500,000 is 25,000. Okay, the company need to pay on this surcharge. Let's look at the example. What do you mean of the control related party transaction? Very easy, very simple. Okay, if you're Ali Papa Sanyang Berhad and you're selling the office furniture, say a table. A table, you're selling this to your company, to your clients, called Good Office at $180. But if you sell it to your Ali Mama, very obviously this is your related company, and you sell to them at $100 only. So it's not at the arm's length transaction. So they will call this is a related party. Then it's not an arm's length transaction. Then you have to use the TP document to justify why you sell to this Ali Mama $100 instead of the market value of 180 ringgit. So you need to justify in your TP documents. Because what do you mean of the arm's length transaction or arm's length principle here? So it says that the profit margin with the third party should be the same with the profit margin with related party. It's just as simple as that. So let's look at the scenario number 1. Can you see there are two companies here, Zozo Sanyang Berhad and Yoyo Sanyang Berhad. This Zozo tax rate at 24% and Yoyo tax rate is at 70%. So if you are the boss, what should you do? If I have profit 1,000 here, I will pay tax 2,240. If I put my profit 1,000 here, I only need to pay tax of 170. So at which company will you transfer the profit to? Of course, you will transfer your profit from the high tax rate company to the lower tax rate company. So this is the scenario. Okay, so this Zozo, they sell $500 instead of the market value of $800. So they sell $300 cheaper. Why? Because they want to sell at lower price and transfer the profit to the Yoyo Sanyang Berhad. Let's look at the example. How much is the revenue lost by the government due to this transaction? Okay, so the unit sold is 5,000 units. The price differences between the selling price and the market value is $300. So how much is the profit transfer from Sozo to Yoyo? Okay, it's 1.5 million just for this transaction only. And the differences in tax rate is 7%. So at the end, the government lost about 105,000 for this company and just for one transaction only. And you could have many related party transactions in the companies. It could be the sales, it could be the expenses, it could be the loan, it could be many and many, or the cost sharing also. Okay. The scenario number 2. Okay, scenario number 2. Okay, we try, this is the A1 Byte and Z1 Byte number. And A1 Byte is a tax losses company. Of course, tax losses company, you try to keep as much as profit in this A1 Byte number, because anyhow, this company not going to pay tax. That's why the A1 Byte, they're trying to sell a higher price than the market value. Because market value only $400 for this buy, and they sell to related company at $800, about 100% higher than the market value. So they try to increase eventually, how much is the revenue lost by the government? Because of this transaction, the government lost about 96,000. That's why, because the government know all our tricks, that's why they're trying to implement these TP documents, emphasize it in year 2021. Okay, let's look at the comparison. Okay, before 2021 on your left side, and after 2021 is on my right side. Okay, so if your company is a loss-making company, even though there's a TP adjustment of 1 million here, so you no need to pay any penalty because no additional tax to be paid. But from this year onwards, okay, remember just now I said you have to pay, your surcharge is 50,000 and minimum 20,000 per YA. So I would say easily your penalty 70,000. So this is the differences before 2021 and after 2021. So we have to house for your boss. Normally as a SME, so one accounts staff, they will prepare many. So you're aware that there are related party transactions amongst your group of companies, then you may highlight to your boss. TP documents, TP and TP documents. Okay, so, hey Cindy, what is the TP documents here? I never heard about this. So who the tax agent help us to prepare these TP documents or not? Can I call my tax agent to help me to prepare now, since this is very important? Yes, definitely you can ask your your tax agent to prepare this, how to prepare these TP documents. And this one, of course, come with a fee. So if you want to know further, then please call up your tax agent. If you are our clients, then you may call Teresa or myself in order to ask more about these TP documents. Okay, so when TP documents have two types. One is limited TP documents. Hello? Hi, anyone can hear? Sales is more than 25 million and your related party transaction is more than 15 million, or you have the loan to your related party transaction more than 50 million, then you have to prepare these full TP documents. Otherwise, you only need to prepare the limited TP reports only. So here, can you see the full TP report? So here are the points you need to prepare. Many things, but limited TP reports. So these are the 3 areas that you need to prepare. Prepare on the organization and control transactions, and prepare on the pricing policies. Okay, this is the differences between the full and limited TP reports. So for your information, as a tax agent, we need at least 2 to 3 months for the first time transfer pricing documents. We need 2 to 3 months in order to prepare one TP document. Okay, let's move on. This is the additional bonus point for you all today. Okay, we keep it short and simple. I believe most of you has already claimed this PSU. PSU is in Malay, but in English we call it as WSP, Wage Subsidy Program. So let's make it simple. If you have already claimed WSP 1.0 and WSP 2, okay, then you can claim WSP 3.0 for additional 1 month if you are located at the MCO states. Additional 1 month means what? You can claim $600 per worker, and provided that your worker's salary is less than 4,000, you can claim 1 month. So when can you start and apply? Actually, it has already opened up for the application. Okay, you refer this last paragraph for all the industry at the MCO states from 19 January up to 30th June 2021. But if you are the industry, if in travel and the retail industry, then you can claim for additional 3 months. If you have claimed under 1.0 and 2.0, they give you 3 months to claim $600 per person, maximum up to 500 workers. But you never claim at all. Okay, under this travel industry, now you can apply. They allow you to claim for 6 months. Okay, this is now they have increased. Last time we can claim up to 200 workers only. Now they increased from 200 to 500 workers. So what are the conditions that you can claim? First thing, it must show that your revenue has reduced by at least 30% from month to month. That means if you fill in online under the Proprietor website, so they will give you to choose one column. You may compare 9 versus December 2020. Okay, so this is one of the criteria. The staff salary is less than 4,000. And how to apply? So you can click into this link and apply prihatin.proprietor. So these are the documents that we require. Okay, if you have already applied under 1.0 and 2.0, I think this is not strange to you anymore. Okay, all these documents you may download from the Proprietor website, except the company registration certificate and bank statement. Bank statement is your company bank statement because they just want to verify which bank account is going to credited into your bank accounts. Okay, so now we move on to this special grant. Okay, this special grant is under this permit announcement. The MCO states, all the MCO states, they will receive 1,000 grants. This one only applicable for the micro enterprise. So what do you mean of micro enterprise? As last year, I believe we also help many of our clients of which their turnover less than 300,000. They can apply this special grant up to 3,000, yeah? 3,000 this special grant. And the government says, if previously you have already applied this 3,000 grant, so if you additional of 1,000 grants if you are at the NCO stage. How about other states? You can receive about $500 only, the grant. So the good news is, do we need to apply this or not, Cindy? Hey, they say if you apply previously under the special grant 1.0, no need to apply. It's automatically granted. And they will directly credit it into your personal, not company bank account by March 2021. Okay, and last, then I would like to share with you the latest updates from the IRB. From 1st of January 2021 onwards, the IRB do not receive any checks. If you send your checks via post or courier, so they do not receive. So it says tidak lagi menerima bayaran cukai yang dihantar melalui post atau courier. So because why? They will encourage you to pay by online. Okay, so pay by online, but accept. Okay, but the following payment still can make through the RPGT, income tax of public performance, withholding tax on compounds. Of course, you still can send your checks by. Are you going to make the income tax online? So you have to, the first one, you can go to the www.hasil.gov.my, or you go for your e-internet banking. You go pay through the bank, and you go to the check deposit machines. And now they have one campaign. Okay, if you pay through all these channels, so you can win the first prize, Proton X70, a bike, or a MyV also. The campaign period is from 1st November 2020 to 30th April 2021. So I end my presentation here today, but for those who require to ask a slide from us, yeah, I believe some of you or most of you is asked, you would like to take a copy of the slide, please for information. So our team will send you the slide pretty soon. Of course, do not expect us to send you in the next 1 hour because it's like immediately after the morning session. The earliest one we will send in the slide maybe tonight or tomorrow morning. Give us some time, okay? Please scan the barcode here. Okay, so any question? Where's the chat box? Okay, basically we have answered all the questions, but there's one last question. They say regarding the syarat listed for the PSU WSP 3.0, it says that we cannot fire, but we can reduce the worker's salary. Yes, if we have negotiation with our staff, but they are holding minimum salary of 1,002. Can we still negotiation with them regarding with the deduction? Yes, actually, like some of our clients, they ask their staff to come and work for 4 days instead of 5 days. So they will have a 20% deduction on their salary. You can apply to do so. But for the minimum pay, I think this is a basic pay, but under the negotiation, you can still discuss, ask them to come back 4 days instead of 5 days. Okay, I hope we answer your questions. So sorry, just now a bit lag. Any question for Adrian? So if no questions, so thank you very much of your time and your participant. Please do not remember to scan the QR code here. So we are happy to help you, or you can call us or visit our website, AdrianYeo PLT, okay, to get in the latest updates or articles from us. I wish everybody stay safe and healthy. Thank you very much. Hope to see you next time. Okay, bye. Bye.